you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite low.
Warren Buffett runs for the exits rapidly in the housing market. You guys, Warren Buffett has just sold his shares, all of his shares in the #1 home builder in the US. And if you have been following Warren Buffett, you know that when he purchases stocks, generally it's for the long run. So what has he seen recently that caused him to make a decision to run away from home builders? And that's exactly what we're going to look into today. And don't forget, you guys, every market is different. If you really want to get specific details about your market, you really got to dig into something called subdivisions, and you have to review something called comp data, which is just a home that has sold generally in a subject property subdivision. So just understand that, you guys. Don't get stuck in any narrative you can trust, but verify. And that's exactly why I have all of the links in my description. And do me a favor, you guys, if you have recently purchased a new home or you went through that process, please share with us as a community. Share with us the time you had, the experience you had. Did you have a good experience? Did you have a bad experience? And then why? And don't forget, if you report back on the housing market, I love hearing from you guys. Please, you guys, share the metro area. I hear such crazy reports all the time, but a lot of times you guys forget to put the metro area. So let us know what metro area you're talking about. And other than that, if you guys enjoy this video, if you enjoy the community, please hit like on the video. It helps the channel out. Hit notifications, share the video, and please empower yourself. This is an article from Newsweek. This is titled, Warren Buffett Sells Off Housing Market Stock Shares. I wonder what he knows that maybe some people don't know. I'm gonna tell you guys right now, I remember all the trolls like, oh, you're wrong, Travis. Are you smarter than Warren Buffett? Are you smarter, Travis, than Warren Buffett? Why would he have purchased all those stocks if the prices are going down? Well, my response now to you is why would he have sold everything if house prices are just gonna go up? That doesn't make sense, right? There must be something to this. Let's get back into the article. Warren Buffett, one of the most successful investors of all time, walked back on a bet he had made on the US housing market last year, selling off recently bought stocks in major US home builders. So he's walking back that bet. In August of 2023, Buffett's company Berkshire Hathaway informed the U.S. Securities and Exchange Commission that it had invested in D.R. Horton predominantly, but also Lennar and NRV in the quarter ending June 30th. The firm bought, respectively, 5.9 million and 152,000 shares and 11,000 shares of each company. So again, most of it was D.R. Horton, a whole bunch of D.R. Horton. There was reportedly worth over $800 million together, with the investment in D.R. Horton considered the largest home builder in the country, alone accounting for more than $700 million. So he sold roughly 700 more, probably because the stock went up. He sold hundreds of millions of dollars in new home builder stocks. Isn't that a red flag? Is that not a red flag? Let me know what you think. I'm not in the stock market. Is that good or is that bad? What do you think, guys? Now, this goes on. Home supplies have remained historically low across the country for the past few years. This has obviously contributed to keep prices up, even when demand dropped modestly during the housing market correction of the late summer of 2022 to spring of 2023. It was really the winter of 2023. Berkshire Hathaway's move suggested that Buffett, known as the Oracle of Omaha, was betting on the long-term inventory shortage in the U.S. housing market to drive up these companies' stocks. But what has changed? However, in February, so last month, Buffett's company disclosed to the SEC that it had already sold off all of its 5.9 million shares of D.R. Horton in the quarter ending December 31st of 2023, as reported by Lance Lambert. That journalist said it's interesting, listen, it's interesting that Warren Buffett would so quickly sell off his D.R. Horton stake and exit the home builder bet. Interesting, don't you think? Lambert then quoted Buffett's 1996 letter to shareholders, where the investor mentioned that if you aren't, listen guys, from his mouth, this is Warren Buffett, if you aren't willing to own the stock for more than 10 years, don't even think about owning it for 10 minutes. So if that's his philosophy, then why did he own the stock for such a short amount of time? Maybe he's starting to figure out that the data is underreported. Maybe he's starting to figure out if things are going so well for new home builders, then why have they had over 6 months of supply for over 2 years. If the demand is so high, why do we have that much supply? And if the companies are doing so good, then why are they slashing prices? Why are they not reporting sellers' incentives in the appraisal as required by Fannie Mae and Freddie Mac? Why? Probably because he gets it. He gets that the data is being manipulated. He gets that inventory is still sky high. He gets that prices of new homes are in fact plummeting right now. But that's not what he says. While Buffett hardly ever reveals his reasons behind major investments, Berkshire Hathaway is sure to have profited enormously from the D.R. Horton stock. So they made their money and they are out of there. And now this is an interesting article. It's a lot more bullish. This is from Seeking Alpha, and it's going into D.R. Horton. And there's a couple things that they're looking at. And one of those things is not the big picture. They are saying some crazy things here. Let me read a couple parts of this for you guys. The title of this is D.R. Horton. We are bullish despite the near-term macro headwinds. Now, this article was after they knew about Warren Buffett. So they're going against him in this article. Let's read a few bullet points. D.R. Horton has experienced significant stock gains and market share growth in the home building industry since we started coverage in 2022. The housing market has been facing challenges due to inflation and elevated interest rate, but D.R. Horton diversified and affordable housing units have helped maintain growth. And that's, when I see affordable housing units, I'm already like, what are you talking about affordable? Like, have you guys been paying attention to what's going on in the housing market? Where's the affordable housing at? Is that what the institutional investors buy? Do they have a special affordable housing units for institutional investors? Because I can't find any. And this goes on. The expected rate cuts by the Fed in 2024 could lead to increased demand for housing units, but they don't mention why would they cut rates? Because probably the only real reason they would cut rates significantly is unemployment. And unemployment is like a stake through a vampire's heart for the housing market. If people start losing their jobs, it's dead in the water. It's done. We see that always happen. You can't have great consumer sentiment if you don't have a job. We know this. So therefore, they are bullish on the firm in the mid and long term. And really, they're going to note the performance of stocks. Again, you guys, I don't really understand the stock market like some geniuses. I think this is delusional. To me, this is a bull trap, but it has gone up. That is a fact. It has gone up. Their stock has gone up. Now, this chart is very interesting. This is an inflation chart that the article is referencing, basically saying, oh, we're winning the inflation fight. But the thing is, guys, is we're not winning the inflation fight. Although it has moderated, it's still way away from 2%. It's at 3.1, 3.4. I mean, and the thing is it has the potential as well to get even worse. So inflation is still a really bad thing, especially in shelter. Now, this is interesting as well, you guys. This is existing home sales. So one of the reasons that he made this bet is because he's like, existing home sales are in the gutter and builders are in a better position to incentivize buyers to purchase an overpriced house. Remember, a lot of these builders are offering, specifically Lennar in my area, is offering a 4.25% 30-year fixed rate. So a lot of the people are like, oh, when rates go down, buying demand comes back. Yes, it will come back. But remember, I've had that for like 2 years in my market. I've had 4.25 to 4.5 30-year fixed rate Lennar, plus paying off closing costs for the last 2 years, plus massive price declines. So builders can get away with that. Existing home sellers can't always get away with that. And so you see existing home sales in the gutter while new home sales is fairly elevated still. Take a look at these charts. So here's existing home sales. You guys see it's in the gutter, going down to the great financial crisis. So it is horrible, you guys. It also goes back to 1995. So home sales are in the absolute gutter. But when we look here at new home sales, you guys can see that the chart has been kind of going up since 2010. Now, it did go down massively here, obviously because of sentiment, not sediment. That's at the bottom of the ocean. Sentiment. I apologize. Okay, sentiment. So that has been going up. That's actually a pretty cool thing. Also, when you look here, it's like they got some profit here, but don't forget, you guys, D.R. Horton was one of the first builders to come out and said, basically, in order for us to stay profitable, we're going to start having to go down on prices. D.R. Horton said that. Remember, I made a video, and I also made a video saying that D.R. Horton, maybe not D.R. Horton, but probably, but maybe not D.R. Horton, but some new home builders, they're going to be summoned to Congress by 2026, and Congress is going to ask them, why'd you lie to us? How did you get away with this? How were you able to hide the data? Why weren't you counting concessions in appraisal value? You're open up to lawsuit. I think that's going to happen. Now, look at this, guys. As far as affordable housing, like this is their point. Like, I think it's foolish to say there's any affordable housing for D.R. Horton, but It is what it is, you guys. Let's just look at this. Now they're saying that 23% of their inventory is under 300,000. Okay, cool. There is tiny houses, right? With no yard, absolutely. Some of it's trash, some of it's nice. They have 27% between 300 and 350. They have 20% between 350 and 400, 19% at 400 to 500, and 11% of their inventory at 500,000. So, I don't know, you guys. It's really not affordable for most people around America. But nevertheless, their market share is going up. So you can see pretty much steady growth from D.R. Horton since about 1993. That's pretty substantial, actually. So I see it. I understand the data. But again, I keep going back to hypersupply. If these builders have too much inventory that they cannot unload, they will start going bankrupt. In fact, after I'm done doing this video, I'm going to give you guys our first video of a Texas home builder who finally went bankrupt. And that's exactly what we saw happen in the GFC. If these home builders have too much inventory, they go under because the financing of the inventory and the financing of the HOA and the development is very expensive. And so they will always be distressed sellers. They will always be forced to sell. And so when they cannot sell, they go under, and they go under fast. Now, speaking about sentiment, here's the consumer sentiment right here. I do want to point out that since about right here, you guys, sentiment has been going up to about 80. So I don't like that. I mean, that to me, that's crazy because sentiment is about as high as it was towards the end of 2020. And in 2020, we were in some messed up stuff. So I don't like that. It's going up. When that goes up in times like this, it's very dangerous for the asset bubble we have. There's a lot of potential for that asset bubble to get bigger. And we saw that, if you were paying attention, in 2023. But even though this has been shooting up, it is way far from pre-pandemic. Pre-pandemic, we were way up here. So again, even though that has been going up, it is still way lower than it was pre-COVID. And it's actually near where it was right out of the GFC. So right out of the GFC, we were about right here. So consumers, quite frankly, what I see in that data is right now, consumers are probably, a lot of them are scared. Some of them have resentfulness. Some of them are bitter, but all of them are confused on what's going to happen next. And that's why I keep trying to categorize this for you. New homes, completely different than existing home market. Austin, completely different than San Antonio. And then subdivisions within Austin are way different from each other. You cannot hang on any one data set. You really, really have to get used to being able to access MLS data. And if you don't have access to the MLS data, make sure your realtor is providing you with market analysis on every single subdivision. So what I really want from you is I would prefer for each and every one of you to do a market analysis prior to purchasing real estate. I want you guys to start asking for market analysis, but the most important thing is I want you to learn how to read it. If you understand, and it's simple math, it's not even hard. I don't know why there's people paying $10,000 for these courses in these communities when it's just like 2 + 2 = 4, 4 + 4 = 8, 8 + 8 = 16, 16 + 16 = 32, 32 is 64. It's that easy. It's not hard, you guys. So I please understand that if you want to know if you're getting a great deal, if you want to know if a property has wedge or value or equity and has cash flow, it's very simple math. But most people need to understand that no one's going to care about your investment like you care. So you got to put in the work. You cannot rely on the professionals to care for you. You must be in charge of quality and care over your investment. And I hope you guys are starting to wake up to where you're starting to understand that the industry, although there are some great people, small amount, some great people, but the overwhelming majority of professionals in real estate are toxic, greedy, and corrupt. And that's just the fact of the matter. Now, you don't have to believe me. Go find out for yourself. Look at the reviews, look at the testimonials, look at the DOJ getting involved in the NAR lawsuits. The housing market right now is absolutely bonkers, you guys. And I think it's important to look at where the money is going. Don't forget, Amazon, Bezos sold a whole bunch of his stock. Google sold a whole bunch of their stock. Warren Buffett's running away from the housing market. What does all this tell you? It tells me caution. The recession is close. It's not here yet, like a full blown, but it's close. Now, do me a favor, guys, comment below. Let me know what you learned. Let me know what you want to add. Let me know if this gave you any epiphany. I'm really anxious to hear from you. And now, other than that, I hope you guys have a great day today. I hope this video was helpful. I hope you found value, insights, and perspective. And if you're out there investing in real estate, you know that I wish you luck. And I hope you win.